Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for April 18th, 2022. We are recording this at 1 p.m. Eastern Time, and this is episode number 338. So this is a special preview episode of the big Synergy Traders event this week. The theme for this one is going to be Tech Wizards. So we're going to have, over the next 3 days, 33 sessions covering some of the best software, indicators, algorithms, apps, tools, and platforms to help you make money in the markets. So we'll be starting at 10 a.m. Eastern Time tomorrow morning. And all of the guests on today's show will be doing presentations. So we'll talk a little more about that later. But my name is David Kosmeter. I'm the creator of Timing Research. And today I have arranged for Sunny Harris to join us, and Toni Hansen, and Erik Gebhard, and the option professor is back to moderate. So I'm going to go ahead and turn it over to him.
Okay, great. And what a morning we are walking into. I guess that full moon Saturday night has got everybody in a different mood here today. But we have a lot to talk about because the stock market's under pressure, the bond market's under pressure, and the commodities are rising very sharply. So that's the backdrop of what's happening here today. And we're going to hear from our guests on how they see not only today's action, but what they see is coming up. So let's start out by introducing each other. The first one is Sunny Harris. Hey, Sunny, could you just give a background on yourself and what's going on at your company?
Sure. I'm a mathematician and a professional trader for 41 years. Actually, I've been a mathematician longer than that, but I've been a trader for 41 years. And I primarily use an indicator that I built called Sunny Bands. And it tells me all I need to know about any market I want to look at.
Okay, and we'll get into the Sunny Bands later in the broadcast so we can take advantage of that as well. Erik, again, you obviously very experienced as well, particularly in the option area. So can you give a little background on yourself for the people who are not familiar, and also what's going on at your company?
Certainly. Yeah, I started back about 31 years ago with futures and options. Actually, even before that, I was in securities after graduation with mutual funds and variable annuities, all that fun stuff, but sort of leaned toward the futures and options side of things. And after working for quite a few years with some large brokerage firms trading options, I co-founded my own firm. It's AltaVest in 1997. And since that time, we've developed our own unique approach to trading a very specific type of options strategy on the stock indexes. And we use some technology and algorithms and automation to help clients do just that. So that's what we're going to talk about later this week in a presentation where I do a demonstration of our Theta Trader software.
Okay, that's perfect. Toni, again, a little background on yourself and what's going on at your company.
Yeah, sure. So my name is Toni Hansen. I've been trading since the 1990s. Started my company in mid-1990s, basically just to help other individual traders learn how to trade and read the markets. So I've been full-time since that point. I also started out in stocks, but now I currently focus on the futures market.
Okay, and are you doing mostly the short and swing type trading, or?
I do some swing trading as well as a lot of day trading. I focus on oil and the different index futures and sometimes gold and bonds as well.
Okay, great. So a lot to talk about here as well. On every Monday morning, we try to start out with the question of the week, which is from where we open today on the S&P, where do you think the market may close on Friday? And in this day and age, it seems like an eternity between Monday and Friday. But, just to get an idea of what your opinion is on the market, I'm going to use the E-mini here for June as a reference point. And I am going to see that today, I believe, let's see what we got here. I've got the open at around 4403. So let's call it 4400. And where do we think the market will be closing on Friday? Up or down or the same? And we'll start in the same order. Sunny, how do you feel about this week as far as about a 4,400 level on S&P?
I think we've got another 50 points or so to go down. My target's at 43.25, right in there.
Right
So
around.
I think we're going to, I think we'll see some back and forth movement, but I do think we'll end up down 50 points by the end of the week.
Okay. And how confident do you feel about that? A little bit better than 50-50 or even higher?
Yeah, I would say better than 70 probably today.
70. Pretty good probability there. Okay, Eric, what's your tea leaves telling you between now and Friday?
Am I allowed to copy what she just said?
Ditto. Just say ditto. Huh?
Yeah, I was going to suggest 43.30, and with certainly a greater than 50% level of confidence, I would suggest somewhere at around 60 to 70% level of confidence. In fact, I probably might even look for a slightly deeper correction than that. Or I wouldn't even call it correction. I think we're
trending.
We're trending lower, and it's just that simple. And rallies should be sold.
The big throwback rally to 46.31, in your view, is kind of like that was a throwback rally, and now we're just resuming a deterioration.
Absolutely, and that was a heck of a short squeeze.
Okay, it certainly was.
Yeah.
Yeah, it would be hard to believe anybody's short after that rally.
Right.
And Toni, how do you feel between now and Friday, using around 4,400 as a level?
Yeah, I mean, I'm pretty much on par with what these guys are already saying as well. That 4,600 level, based upon how I had used my fib fans, that was right at the 76.4% Fibonacci retracement on the fib fans, which was a really strong resistance level.
Yeah.
But since we shifted as we were heading into it, we've kind of got a zone where it's harder to get as rapid of a drop coming off of that level. And that's what I've been talking about with my traders over the last 2 weeks, was there wasn't like a core setup to pull this down. It's more of what we call like a zone of pain, where you're in like that choppier back and forth zone. But I am aiming for between that right around like the 4,300 is really the lower limit of the zone that I'm looking at. And then the upper is 43.27. So right around where both Eric and Sunny were aiming.
Yeah, I wonder if that high point around 42.80 might be an area, around between the March 7th and the 14th, there was like a little bit of a high mark. And then once that got taken out, we went on a nice big advance. And I'm wondering if on the way down, that could form some support around 42.80. Because I see a big red bar there. And it seems an interesting point. All right, let's talk about what's behind the curtain here, as far as what fundamental or technical things are you looking for coming up? I mean, we've got earnings coming up, but we've got the technicals and all that. So, Sunny, what are you looking at technically to give you some idea on why you think that's going to happen down towards the lower number?
Well, there's what I call an attractor at that level. It's the 10% retracement from the all-time highs. And I think that we're probably going to test that again. And we're currently below all the three moving averages I watched, 21, 50, and 200. So, it looks like it could go on down. But with earnings reports, there's room for lots of surprises. Yeah.
And Bank of America is a little bit of a surprise, but it hasn't come off the canvas too far. Okay, well, Eric, what are you looking at technically or fundamentally that can explain your views?
Oh, sorry about that, guys. I was on mute.
Sure.
And forgive my voice here. I have some sort of weird laryngitis from too many presentations. So anyway, yeah, I would suggest we're looking at some other elements that we follow and that we track and that we create and build on our own, sort of like Sunny had mentioned some of her own proprietary indicators. But you even mentioned, Jim, looking at, you were looking down to close to 4,300.
No, I thought it was like 42.80. There was some kind of I'm just looking at the chart that's on our screen.
Right.
And if you notice, there's a red bar there that was a high point. And then when that got taken out, that became kind of the springboard to go it up to 4,600. So I'm just
Right.
assuming on the way down,
Might provide
that
some,
might catch a bid if there's a reason to catch a bid.
yeah, it might attract some attention down there and provide some
Yeah.
support maybe. But,
Yeah.
you know, certainly even looking at the graph I'm looking at, it doesn't really show up on the graph on the screen as much, but I don't really follow as much the traditional patterns, you know, head and shoulders and so forth. But having said that, someone might make an argument for an inverse head and shoulders starting to form,
Okay.
at least year to date on the ES. But if that being the case, this could pull back even further here and kind of build out that shoulder a bit more before it finds some support. But nonetheless, I think the setup with the global macro, whether you look at technicals or not, but just the momentum, the sentiment, the heaviness that seems to be working here in the last few days, and after that short squeeze, I just think we're looking bearish.
As far as the VIX is concerned, is that telling you anything? Because we took a peek underneath 20 and they didn't like the peak, so it went the other way a little bit.
Yeah, certainly that's one key element that we follow, and I think there's a lot of support. We don't think the VIX is probably going to get below 19.5 or so. So that would suggest we're going to continue to sell off on the ES.
Mm-hmm. And Tony, what's in your magic brew that you're looking at that gives you ideas on what's going to be happening?
Okay, well, I don't really look at the VIX much. I purely focus on the price action that's happening. Well, that chart you have there's that head and shoulders that he was talking about. The problem that you have with that is that high here within the last couple of weeks was higher than the one back in February. So that puts our neckline angling to the upside, which makes it not as strong of an inverse head and shoulders as if, you know, our pivot going into April had been lower than the previous high, previous high being back in, you know, early mid-February. So what I'm thinking is that on our larger weekly and monthly timeframes that we're going to go into a bigger range, since we're basically breaking out of the narrow channel that we've been in here for quite a while, just starting to get a lot more of those bigger back and forth swings keeping up over the next couple of months. So we can go slightly higher, we can plunge a little bit slightly lower and just kind of swing back and forth, but we need to watch for those shifts in momentum on the weekly and daily time frame. And right now we just don't have enough of them kind of working together to give us a good idea. Hey, is this really going to drop sharply, or are we going to have a chance to hit a higher high before the end of the year? And based upon the way we're playing out right now, the bearish side of things is more probable at the moment, just over the next couple of months.
The relative strength index, do you use that much at all, Tony?
I don't. So you guys, I started out looking at a lot of indicators way back in the 90s, early knots. But after that point, I've really kind of dropped back to just looking at volume and Fibonacci levels. That's about it.
On the downside here, what's your Fibonacci, shall we say, projections?
Well, we've got that next main support zone is basically where you were talking about your red bar there. That's going to be about the 76.4% retracement of this last rally from the 14th and up. So that's that kind of congestion zone that I was looking at as kind of like the lower end of what we need to watch for. And if it just kind of chops into that level, it's going to be easier to get a bounce off of it. If it falls into it pretty quickly, then there's a better chance that we're going to have a continuation that can break those previous lows more easily.
Okay. So basically, those are some of the reasons you guys are thinking what you're thinking here. Now, I was wondering if there was any particular markets that you're kind of looking at, because as I'm looking at the board, it just seems to be the stocks and the bonds are under pressure, and the commodities are definitely getting a bid, and they almost look like they're ready to accelerate again. Sonny, any particular market that you're kind of focused in on? Would it be the S&P or more the NASDAQ, or what do you think?
Well, I focus on the S&P. I've been trading it for a long, long time, and I specialize in it. And as a result of specializing, you get good at something, right? So I focus on that for my own personal trading, and I also hold some stocks long term.
Right. And as far as the long term on the stocks, I mean, do you feel like this is really a period that's going to be under control? Meaning, that we might see weakness, but do you see any severe weakness where long-term holders might have their confidence tested a little bit? Like, in other words, there's really two schools of thought. One is we hit the lows in February on the 24th, 4,100 on the S&P. And the other school of thought is that it's going to break that low and maybe go down towards 35, 3,700. Where do you fall in the camp on that one?
I don't think that's going to happen. I think I've been saying that we're going to do a rolling 4-wave correction.
Okay.
And I think that's what we're in. I do think that we're going to go lower, but I don't think it's going to be a crash lower.
Right. Too much, maybe too much cash in the pockets of consumers to cause that much, and not enough debt that they're carrying, because B of A was saying consumer taking on debt has been kind of weak. So they haven't even hit the old loan sharks yet. So there's could be some room for them to continue to spend.
Definitely could be.
Yeah. So if you were going to give parameters, you on a probability basis, what probability would you put that 4,100 in February was the low on this thing?
4,100 in February. Well, that probably I would call it a local low. I don't know if it's the ultimate low or if we're going to hit recession sort of activity, but I think the where did I call it out earlier? It's 40. I think the 43.25 level is going to be the next low, and we'll go up from there.
Okay, so you're not terribly
don't think-
thinking that the 4,100 is at risk for
I don't
getting
think so.
blown out, not in the short run anyway.
No, in the short run, I don't think so.
Yeah, it could be a deal where if the economy deteriorates as we go into 23 or something, then the market could deteriorate, and then they could make a run at it. Maybe if a recession-y type feeling was more in the cards.
Agreed.
Yeah. Well, Larry Summers makes some good points. He says when inflation is above 4 and the unemployment rate is under 4, there's a pretty darn good track record that within 24 months, you get some type of recession going on. So if it's going to happen in 12 to 24 months, they're not going to price it in this early.
No,
Yeah.
definitely not.
All right, Eric, again, you're following the S&P mostly, but you have anything else on the radar?
Yeah, sure. I think we don't necessarily trade as much volume on any other markets. We're primarily, like you mentioned, the S&P, sometimes the NASDAQ, sometimes the Russell in terms of the index, but we are tracking crude oil yields, of course, and one thing I can recall reading over the years, and maybe more so than ever lately, and don't quote me specifically, but I'm almost sure this is quite accurate. I think it's 15 of the last 15 recessions were always have been preceded by a surge in oil prices and energy prices. So, here we are. Yeah. And, also you're looking at yields, the yield curve being inverted just a couple of weeks ago, now coming off that a bit, but you have you certainly have that still in the cards. So that's also a precursor to oftentimes recession. And that doesn't mean you're necessarily going to get a crash in the stock market, but I'm also looking at what's happening in China. They've got the lockdowns, or the Apple factories shutting down, and look at Apple stock. Such a major component in terms of its weighting for our indexes here, and I think that's a kind of a key market for people to follow, although we don't specifically trade it. But if you look at Apple, that's something to keep an eye on, sort of as a telltale signal.
Well, it's a very big part of the indexes. So
Right.
The indexes certainly are not going to be going up if Apple goes down.
That's right. That's right. And everyone institutionally and every retail trader holds it. So it's it's something that isn't off the radar. It's almost like, I guess, what might have been 50 or 60 years ago with what do they have it, the Nifty 50 stocks? Is that what they
Sure.
called them? Yeah.
Oh, yeah.
So here we are with, Apple sort of taking over that mantle. But yeah, so certainly you want to keep in mind, I think people should be mindful of what's happening. I know it's easier in some ways to look at just price action, but on the other hand, I think it does make some sense to at least do the best you can with paying attention to what's happening around the global macro landscape. And as much as you might think everything's all figured into prices and calculated in, it's not. So
Mhm. And especially with the 30-year, everyone was kind of talking that 280 might have been the peak, and obviously they've kind of blown through 280. Now there's a lot of talk
Right.
about 350 ultimately, and I don't know that the market is priced for 350 on the 10-year.
No, and some of those figures are just arbitrary,
Yeah.
clickbait headlines. And
Well, one Elliott Waiver guy was kind of, talking about how 280 fit into all these kind of patterns or whatever. So I was looking at 280 as if it could have been a high point, but it seems to be pretty significantly taken out.
right.
We'll have to see if it sticks. But going back to some stuff that you do, which is trying to take premium in with maybe some type of a credit spread type situation.
Right.
In this environment, what kind of a parameter on the S&P index would you see as something reasonable? I mean, would you have to take your strike prices well underneath the 4,100 level to feel comfortable?
Well,
If you were doing the put side?
Yeah, exactly. Depending on if you're directional or non-directional right now. Today, this very second, we're looking at actually selling some out of the money call spreads.
Okay.
But at the same time, we have plenty of people still looking at some non-directional strategies, and something like an iron condor. We have a proprietary strategy called a dragonfly, which is really a variation on a condor. So just looking at the boundaries, like you mentioned, on the puts and calls that you might be selling on something like that. We're looking at, for example, our algorithm for today says the June in the month, you'd want to sell the 3,700 puts and the 4,850 calls. So if you want to draw like a line on the
your
ES,
parameters would be 4,800 and 3,700 for the period of time.
3,700 and 4,850.
Oh, 4,850.
Yeah.
Well, that's plenty of room on the upside so far.
Yeah, that would be on the June in the month. So the ES.
Yeah.
You could just draw horizontal lines across the top and the bottom there on those levels and give an idea. That's a pretty wide range. You're kind of somewhere around 2 standard deviations out of the money, and the delta on those strikes are below 10%.
Yeah, I heard some pretty intelligent views on people who own Apple and Google and Microsoft who'd never want to sell them or whatever. And they're holding on to obviously an asset that's declining. The covered call writing 15% above current prices, has been not a bad strategy, because again, it still gives you upside of 15% from the standard price that you're at, but it starts giving you a pretty good premium on the downside as a little protection. So it kind of protects your cost basis by bringing in those premiums in. And as long as you go 15 or 20% above the current value, you really haven't been tested on the upside. So that covered call writing, which is, boring to some people, it's also quite good at protecting the cost basis in this kind of environment. Particularly with the Googles and the Apples and the Amazons, the bigger companies that, people hold on to for longer periods of time.
Yeah, just real quickly, I would say absolutely. But I think the problem, and well, it's only a problem depending on who you're talking to, but the less sophisticated investor doesn't find that appealing and sexy, because they feel they're limiting their profit potential. They figure it's going to make 100% a year every year. So why limit their potential? But of course, we know that's, not reality.
Like I say, every dog has its day. Every strategy has its environment. The environment we're currently in, if you give it 15 or 20% above current value, you're probably not too far out of the maximum potential. And then bringing cash in, that'll ultimately reduce your cost basis. That's the whole idea. You're really not looking for pom-poms and excitement. You're looking to protect your principal.
Indeed.
Yeah. Hey, Tony, again, like I say, can you go into a little bit more about how you operate with these markets, like on the S&P? When the market opens, do you look for a certain range? And then if the range breaks, I mean, there's a lot of different ways to do the short-term trading. What are kind of some of the keys that you use?
Well, as far as like, opening range gaps and things like that, I do a lot more of the all sessions chart. So I do a lot of trading, around like 2 in the morning
Okay.
Eastern. So I'm doing a lot of late night stuff and not really just playing, the open. Lately, the things that I've been focused on are mostly oil. That's been the main market that I've
Uh-huh.
been trading. If you wanted to pull that up, I can
Sure.
show folks what we're looking at on oil.
Like last night, I noticed that the S&P went down all the way to 42.55, but then it opened up above 4,400. So obviously, an overnight session with the buying would have been
Yeah.
a way to go, wouldn't it?
Well, you had a pretty nice flush. Hold on, let me pull up my own
Yeah.
chart to take a look
And
at
that happens
there.
a lot overnight, doesn't it? Where
It
there's a lot of
does.
action overnight that does
Yeah,
not confirm in the morning, right?
yeah, we get a lot of nice movement overnight.
Yeah.
You've got to wait until, some of the other markets are opening, foreign markets, but it's a good time for trading because you get some pretty smooth moves. You got to watch out for news and things like that, but overall it's a good time. Here on our oil here, let's see what time frame we got, the hourly. Okay, so that break here this morning, that pattern there right around, looks like, let's see here. I've got it on the 10th, sorry, looking at it on the 10th. If you pull up,
Yeah. Can you put up like
yeah,
say a day chart? And because I'm looking at a day
yeah,
chart here and it kind of
yeah.
kind of a buy signal around 106 and a sell
Yeah, we
signal
had
107 and
on
back
that
to the buy.
yeah, that smaller time frame, we had that kind of like shift in momentum that you saw on the hourly chart
Uh-huh.
where that triggered a buy. I had been short coming off of that second pivot high there. What I'm watching for are these changes in momentum, and that's what's making the S&Ps a little bit messy right now. So we had the pop up there around the 21st. And it kind of shifted there at the highs. You see those like little green, red, and then the almost a little doji there in the middle before that big red bar on the downside. So the pop with the really strong green moves and then the shift at that high, that's often a good sell pattern to get a nice correction coming in. So when we're looking at what's going on in the S&Ps, we had that same pop and shift. And then we've also got that similar kind of shift on the downside over just the last couple of weeks. So that zone back at that previous low, around the 14th or so, that support zone was a really strong support level. And that's where it began to kind of shift to picking up some positions on the upside. And when that channel broke, that offered the confirmation. So we don't have as much of a shift in that momentum on the S&Ps as we saw in oil. Oil was actually much stronger setup here over the last couple of days than what we're seeing on that pullback on the S&Ps. If you pull up the S&P again, you'll notice, it took like 6 days to head higher on oil and then about twice that to pull back. So we're only at about the 1-to-1 ratio upside to correction here on the S&Ps with it being slower. So that's where I think we've got a little bit of that movement still to come down a bit more.
Right.
It's just not as pretty as what we had with oil.
If we put up crude, I was just going to ask you a couple of questions
Yeah.
off of what I'm looking at. I'm just using a monthly here with a couple of moving averages, 10 and 20.
Mhm.
And I got a nice buy signal on the thing as they crossed around 90, about $95, let's call it even. And then it kind of, went up, and up and up. The only thing I'm noticing now that it would be somewhat concerning is I'm looking at an RSI that's at like 66.
Yeah.
And the last time we made a high at 108, the RSI was up at 73. So that's a decent size divergence. Would you think if it started breaking under, say, 107 and certainly under 106, 105.50, that there could be something going on to bring the prices down?
The 105.50 would be the one that would be more of a concern for me. I think that
Right.
currently we're still in a pretty decent momentum channel, but it's not as strong as the
Mhm.
original bounces. So trying to take out those previous peaks is going to be really difficult. If
Mhm.
you look at this monthly time frame though, and you drop back to that, kind of squish your monthly up here a little bit, that crossover, tighten it up. Yeah, right there. So you see those two waves of selling here with the flush on the downside right there,
Right.
heading into 2020, where we saw things go to basically zero and under zero for
Right.
those
Right.
for
Right.
futures traders. If you look at this chart and then you compare that to our hourly chart, you can see that very similar strategy that broke us off of the lows here. So that smaller time frame, 240-minute hourly time frame, that trigger going into 2001 there, that's that same pattern that we had coming off of those lows around April 8th to April 10th.
I got you. So right now you think it looks pretty good, but under 105.50, you'd be a little bit concerned about that.
Yeah, the zone that I'm watching here for resistance, that I'm looking to take some of my position off is the 110.60 kind of zone, and I'm kind of watching even between 109.30 and 110.60, kind of almost where we are here,
Uh-huh.
because that's where we have that channel break that is going to be pretty decent initial resistance that we need to pay attention to.
Yeah. And on the longer term charts, like the 1 year, the some of the moving averages are still, like the 10s underneath the 20, but they are turning up, but they're down at 102 and 100. So 109 and 110 is, pretty far away from 100.
Yeah, on that larger time frame, I mean, I wouldn't be surprised if we see this go into more of a range, kind of get the tighter back and forth action over the next,
Yeah.
6 months to even a couple of years, possibly.
Now, some people were thinking that 147 in 2008 is a high point that's not going to get taken out. Do you think it will get taken out? And do you think we are hitting a high point for energy in 2022 that might change either through
I
supply
don't,
changes or demand
yeah,
destruction?
I don't think it's going to break by far if it
Mhm.
does continue with the current trends that we're on.
Right.
It's more likely that it would create a trap above that level. So I wouldn't be looking for a substantial break
Right.
above it, but I wouldn't be surprised if over, the next couple of months we see that creep up there to create that trap to pull back.
Gotcha. Hey, Sonny, when you're doing your S&Ps, do you try to use like a day graph, a 5-day graph, or anything, a particular time frame when you're trying to swing trade it?
Well, I use a 1 minute and a 5 minute chart. So I trade 3 to 5
Okay.
times a day, every day, but I also watch the daily charts.
Right.
I get an overall position stance on my sunny bands on the daily, and then I look at the shorter time frames to actually trade.
And you're talking about the 5-minute and 30-minute?
1 minute and 5 minute
Oh, I'm
trade.
sorry, 1 minute and 5 minutes. And you,
Yeah,
and
and then
it's
and
not
then I
too,
watch the daily for the broader view.
okay. But when you use those extreme shorter ones, do you find it to be choppy too much, or are you just using that and then other things and then you're not working just off the 1 minute or the 5 minute?
I am indeed. It go, on my sunny bands, these charts go from the bottom to the top and back to the bottom and back to the top. The sunny bands do a beautiful job of calling all the turns. So I do look at those on the really short time.
Okay. And the reason you like that is that you feel like you catch moves, but it definitely keeps things on a short leash. So if they turn, you're out pretty fast.
I'm out pretty fast. Absolutely.
I
Yeah,
got you.
I'm watching for those moves. I like the choppiness.
I got you.
I might be in a trade for 5 minutes. I'm never in for 5 hours, but short-term trades, and then they move back and forth, and I try to catch all those.
And are you looking at the precious metals here? Because there's definitely a
Sure.
bubbling going on here. This, once silver gets above $25, it seems like it's got its boat legs. And once the gold held 1900, it also has its boat legs. Do you think, are you seeing anything to give us an idea that there could be a significant acceleration to the upside?
I think that gold's going on up to 2000 again. It's
Mhm.
got a slight
Well, it
upward.
hit that today, didn't it?
Oh, didn't it?
I thought it hit that today
High,
on the,
yep,
yeah.
2003, the high.
yeah,
So I think we're going to break through that and continue on up.
okay. And
We're above all three of the moving averages, 21, 50, and 200.
mhm,
And we've got a high on the 8th of March
uh-huh.
that I think we're going to break through.
And what about on the silver? Because that's
What's
another
the-
one playing
what's-
catch up.
At SLV,
SIL, I guess is, but you could also, look at the future.
no, I don't see that one. Sorry.
So
I don't
SLV,
like-
yeah, if you put SLV up, that'll give you the future. There you go. Well, I don't know what that is.
Okay.
Yeah, there's your silver trust.
Yeah, I don't really watch silver. I mean, I have a lot of bags of junk silver, but
Mhm.
I don't trade the silver prices. I think that they're not as exciting as the gold.
Mm-hmm. All right. Well, so anyway, on the shorter term stuff, basically you're keeping things on a very short leash by using the short term graphs.
Right.
On the longer term stuff, on the bigger stuff, because I know you like tech, right?
I do like tech.
Yeah.
I
So
love my Tesla.
yeah. And do you what do you call it? Is there anything in the lithium area or anything like that with the batteries that look interesting to you?
Give me a symbol. I'll take a look at it.
LAC.
Okay. That looks like it's going to be some more sideways. We're in a pennant formation right now, and we're under my dynamic moving average. I think we've got a little room on the downside on that. It's sitting
Another
on
one
the
that
inner
people-
band, but it hasn't touched the outer band yet.
Another one that people liked on the electric was Panasonic PCRFY,
What kind of
because
symbol is
supposedly they
that?
were going to have a good battery for these guys to use. And
Yeah, and they're still on their way down too. They're under all three moving averages. They're under my dynamic moving average.
yeah,
And this is a bearish sign. We've got all the prices between the lower outer band and the lower inner band right now.
mhm.
So that's bearish.
And the other one that people were liking was ChargePoint, CHPT, because they were going to have all the filling stations for the
Yeah,
fleets.
that's a good idea. That's a really good idea. But they don't show anything positive at the moment either. Still looks
Right.
like it's moving down.
So
I just read an article this morning that said that we're going to be all out of batteries before we can. It's going to be worse than the chip shortage.
now, Eric, are you doing much with the treasury bonds or the treasury notes or anything like that? Because they obviously been deteriorating pretty good, but
No, we don't specifically have our algorithms tuned into that market. But certainly we follow it to help us inform, maybe on timing of things, but we're not trading that specifically in terms of our software with our options strategy.
are you doing much with the Russell? Because the Russell is obviously mostly small caps and
Right. Yeah, certainly we do
Um,
trade the Russell.
are you doing with the future or are you doing with IWM?
No, using futures,
Okay,
RTY,
okay.
depending on what vendor you're looking at.
Yeah, let's just take a look at it here and see what's going on, like the June future, something like that.
Yeah, certainly. Let's take a look at, I can
got
give you an idea
Q,
of what what our mathematical wizard machine told us today about the Russell here. Let's take a look here. So the June expiration for the Russell, we'd be
Mhm.
looking at selling the 1670 puts and 2270 calls.
1670, huh?
Yes.
And isn't at around 1900 and change?
Yes.
So the
1993 or so. Yes.
The premiums are there, even though it's that far out of the money, huh?
Yes. So 1670 on that chart would be really off the chart.
Yeah, yeah,
And
yeah.
the 2270 calls you could be right near the right near those highs, I guess.
Yeah.
From
That's quite a window though. And what kind of time risk?
well, that would be 61 days till expiration, so about 2 months. But we would always get out before expiration.
Yeah.
Yeah, we're always pulling the plug on those trades for whether it's a win or a loss. We're always out before expiration. If you capture a large part of the premium,
Yeah.
then there's no need to squeeze every last drop from it.
Yeah.
Just take too much risk trying to collect those extra few pennies.
Yeah, I found that that's one of the differentiating things between people that are more novice to the area than people who traded it for a long time, is the understanding that when you write an option, it can only go to zero. And once it is, a majority of it has been gone, you're no longer getting paid to take the risk any longer. So you either should do nothing, or you should be looking for a new strike price combination that brings in some money.
Right. I would, if I were running a trading desk and a team of, premium collector traders, a hedge fund or something, that would be kind of the first thing I might ask on on an interview. This filter them out. Absolutely. You end up in a position where maybe you collect $200 on a trade and it's got 60 days, and perhaps after a month you could close the trade out for maybe pay $30 to close it out. So the more sophisticated, educated, experienced trader would gladly take that opportunity. But the other people oftentimes scratch their head and say, well, why would I pay $30 to close this position when it's certainly going to make all that money for me and go all the way down to zero. They kind of conveniently forget the fact that it's never guaranteed to make that never guaranteed to get to zero. So they need to cover the risk and then move on to a new set of strikes and a new set of expirations.
Yeah. One other thing, though, I was talking to Sonny about when we had a conversation on Saturday was an experience I had during one of the big crashes that happened. Was I had some credit put spreads going that had gone down, which was what we wanted to see. And then we had covered the one side of it. And then the other side, meaning the short side, had shrunk down. So we covered that. But on the long side, the long was very, very small because, obviously the long was underneath the sell. So, and we just left it alone rather than closing it out. And because of a crash, that put exploded. Do you ever consider keeping one side of it, particularly the limited risk side, if it's already down to almost zero, just in case there was to be some kind of a crash? And of course, in an environment like we have now, where they're withdrawing liquidity, it's coming off of 4,800. The Treasury bond has gone from 0.5% to almost 3% on the Treasury 10-year. This might be an environment where people, you could see some acceleration. Do you ever consider that, or that you just close them out and forget it?
No, I think well, you can tell me if I'm wrong, but I think what you're saying is if you own some debit spreads.
No, this was a credit. No, these are credit spreads you own, and the sell side has gone to zero. Well, if the sells are almost, down to where you're going to buy it back. Well, if the sell side's gone down
I
that
see.
far, the buy side has to be at a cabinet bid almost.
Yes, yes, I see. Just that one leg that
Yeah.
you're long.
Well,
Yeah,
a limited
certainly.
risk leg. Yeah.
Yeah, the limited risk and potentially unlimited reward leg.
Yeah.
Theoretically, but yeah, absolutely, you can do that. The only problem with that is it can, it sort of starts to sort of break the rules that we like to live by, which is don't leg out or leg into a spread.
Right.
Kind of creates some bad habits, but yes, generally speaking, you can absolutely do that.
Yeah, I mean, if you were ever going to do it, you would do it when there could be a precipitous drop. And when could there be a precipitous drop is when the market's coming off an all-time high and the fundamentals of money and credit have changed dramatically. We've gone from accommodative to withdrawing liquidity. That is a major sea change, right?
Certainly. And then, like you said, there's really no benefit, next to zero benefit in selling it.
Yeah.
So
I mean, it's really kind of a no-brainer.
That's right.
Yeah. Tony, do you use options much when you do your trading? Or are you just doing the futures pretty much, or?
I've just been focusing on futures. I can discuss bonds though, if you guys want to take a look at bonds.
Absolutely. Yeah, I'd love to hear your view on bonds because I'm trying to
Sure.
figure out if 4% tax-free is a deal
Why don't
or
you
a
pull
dud.
up, why don't you pull up our June ZB futures then? Take a look at that.
Yeah, because basically, the guys who sell bonds, which obviously they have a vested interest, they're saying, you've waited and waited to get these yields. They're here. You should be grabbing them. And, are you grabbing a seat on the Titanic, basically, is what we're wondering.
Right. I'm looking for this to pull down into around 138 as my target zone on here. The way that this has accelerated with the momentum on the downside,
Mhm.
we'll usually see this continue and then kind of aiming for pretty much close to a measured move from that drop that we had here in March
Mhm.
into the beginning of April there, looking for that to continue down. So I think we have a good amount of downside here still before we really see much of that rebound selling. And even when rebound buying, but even when it does bounce, it's going to be easier for it to go back and retest those lows and even hit some slightly lower lows.
Yeah. One thing that people are saying, which I think is very smart, is that in 2018, the Fed made a big mistake. And what the mistake was, is they were the leader in the interest rate market. And that caused an extreme big shock. Here, as you know, they're extremely lagging.
Yep.
And they like lagging because
Yeah.
they're not going to instigate the bond market drop. The market did. You know what I mean?
Yeah.
As
Yeah.
opposed to in 2018, when they were doing all this quick hiking, they were the leader in causing the drop.
It's not me.
Yeah. Now they're just saying, hey, we're at a quarter of a point. I don't know why you guys are on almost 3%. And then they're going to go maybe a half. So they'll be at 3/4 of a point. So they
Yeah.
still can't be blamed for it because the market rates are the ones that are way out of line, not the Fed. So they're lagging. But people think that that's a real, they're unhappy with that lagging. I think they're extremely happy because they can't be blamed for it, right?
Yep, I agree.
But that also may mean people who think that because they're lagging, we're going to get this huge rally because we're way ahead of them. Well, we may be way ahead of them, but they're marching very much in our direction.
Yeah, no, I would not. I would
You
not
would
be
not take
looking for
solace in the fact that we're
any
ahead of them.
sorry. Yeah, no.
You wouldn't use the fact that just because we're ahead of them makes it bullish.
No, not at all.
Yeah.
I do like gold though still. I am holding gold for a higher high, or at least the very least a retest of that high back in 2020.
Yeah, I mean, it went up there a little bit, right? It
Yeah.
went to 2063, which was a 2012 high, I think. Then it went to 21 and change. And so it's had a couple of things up there. Do you think we'll get above 2100 and give them a shock like, hey, listen, I mean, we doubled the price of corn. The beans are up at 17 again. You have got oil, trying to make a march towards at least maybe 116 again. So is it possible that this gold will, give you something parabolic?
Well, it's always possible. Let me pull up my own. I want to look at the weekly time frame here.
The confusing thing is that, is the dollar weak? No, it's actually extremely strong. Is the
Yeah.
Fed adding reserves or taking them away? Well, they're taking them away. I think people that hold gold probably have a little trepidation over, do I really want to fight the Fed withdrawing liquidity? And do I really want to fight a dollar that, is probably going to stay pretty firm because the interest rate differential between Europe and Asia with us is just a joke?
Well, I think you still have a lot of that just uncertainty that is going on with the global situation right now, that I think that is what is making gold additionally attractive right now. I know it's not like we would have seen 50 to 70 years ago, but it is something that a lot of people do take solace in.
Yeah.
And we've seen that just from the very start of 2019, where we have been pulling nicely to the upside. And I do think that that retest of that high zone here this year can easily be broken. So
when you get a wick
yeah.
like that, is that sometimes the end of the story though?
It can be, but the way this kind of rounded off at that low, you can see that nice slower secondary sell and then coming up and retesting that. We have a lot of securities that will make that wick, like that shooting star, or doji or whatnot that we have here a couple weeks ago, where that will still get taken out, and it doesn't necessarily lead to a parabolic move because we don't really have much of a pause before it's trying to take that out.
Right.
It can just create more of a double top where it just forms another trap for traders.
Sunny, on your Sunny bands, do you have any kind of projection of a window on the gold?
I'm looking at a monthly chart of gold on my computer here,
Yeah.
and it doesn't have an upside. I mean,
What does that mean?
Well, it could just go on up and up.
In
Yeah.
other words,
I mean, I
it
think it's
doesn't
going
really
to
have a
break
ceiling.
out.
Yeah.
I think it doesn't have a ceiling.
Yeah.
I think it's going to break the 2147 and go on up from there. Russia and China are both holding an awful lot of gold.
Yeah, and like I say, there's a lot of under ownership, people believe, in this area.
Yes. Yes.
It's not like everyone owns it.
I had a guest on my podcast a few weeks ago, I think, that said he thought that we were going to see 5,000 gold.
And again, it'll go back and they'll put up the big headline, Bitcoin is new digital gold. And once they started saying that was about the end of Bitcoin, and this was about the lows on gold. So, and they always make a case that, the central banks aren't holding Bitcoin, they're holding the gold in reserves. And then,
Yes.
but, then there's another story out there that Russia, has to fund this thing, and gold sales would be one way of doing it. And China has an appetite for gold. So I don't know, there's all kinds of things that are confusing to me. It's definitely not a one-way street because, the US dollar is extremely strong, and that's not generally positive to gold. And they are withdrawing liquidity, and withdrawing liquidity is generally not so positive for gold. So there is cross currents. It's certainly not black and white, huh?
I would agree with that. Speaking of Bitcoin, it's doing a little more recovery. It's formed a nice base, and it's. I think Bitcoin's going to continue on up. I don't know how long it's going to take, of course. Yeah, could be months still, but I do think Bitcoin's going to go up again.
It's always comforting to have the moving averages under your prices and rising when you own anything.
That's true.
And we don't really have that yet on Bitcoin. So when and if that does occur, it might be a more comfortable time to to look at GBTC or to look at Ethereum, ETHE, because those, although today was a nice little reversal to the upside on Bitcoin, huh?
Yes, it is.
Yeah.
Yep.
And
it's up.
ETA, I'm looking at GBTC. It looks like it held that 28 number and it's going up. And Ethereum, let's see what that's doing here.
Ethereum's down 56 points today while Bitcoin's up.
Yeah. Yeah. Oh, we'll have to see how that shakes out. Anyway, we're coming to the top of the hour. It's important that everybody knows how to get a hold of you. And it's very important to explain if you have any special offers or anything you'd like to say, this would be the time to do it. So let's start out with Sunny. Again, how to get a hold of you and any special offers you want to extend?
Sure. I'm a moneymentor.com is my website. My email is sunny@moneymentor. My phone number is right on the top of the website. If you want to give a buzz, I'd be happy to chat with you. And, well, I don't usually make special offers, but I'm going to give 30% off of anything that I have until the end of April. Okay. So anybody that calls or emails and says that they saw me on the Timing Research CFN forecast, I would be happy to do that.
Excellent. Erik, a lot of the things that you do are not easy to talk about in a very brief fashion. So I think it's very important for people to get a hold of you so you can give them the full Monty on exactly what you're doing, which, is very interesting and is really a diversification for what most people do. So how can they get a hold of you, Erik, and you can give them more of a full explanation?
Yeah, certainly. And it's not the first time I've been called difficult. So I appreciate that. You can go to our website, altavest.com, ALTAVEST.com. And there are links there right on the homepage where you can sign up for a demo account and start receiving our trade alerts. And we do have trade alerts that are very unique. So you receive a trade alert on your smart device and you simply touch the screen to accept or reject the alert. Everything is integrated with your trading account. So you don't have to transpose an email or a text and log into your platform and make a mistake when you enter your order. So certainly, I think that's a good way to go. And I'm always available. Erik, ERIK, at altivest.com is my email. And our phone number is right on the website as well. But as Jim mentioned, what we do is oftentimes considered non-correlated or absolute return, which means that quite simply, if someone is an investor in the stock market, especially a passive investor, you need the market to move higher in order to make money. With our strategies, the markets can move up, down, or sideways. And that's really the big distinction there.
Right. And again, by giving a little bit more time, getting more complete details and to talk to you personally, it can bring a lot of the things that might be hazy to a newcomer, particularly, and give them more clarity. And that's my whole point is, everyone's better when clarity's there, and you can get a lot more clarity by getting all your information and talking to you personally than just trying to, get a bum's rush on a short time basis. You know what I mean?
Absolutely.
Yeah. Toni, again, how can we get a hold of you? And then, of course, do you have any special offers or anything you want to extend to people?
All right. Well, you can reach me at Toni@ToniHansen.com. That's my email, and ToniHansen.com, of course, is my website. Primarily, what I do these days is live trading and education. So we take like a different topic each week to focus on. And I show my traders how we apply it to the live market and what our forecast for the day and the weeks ahead is based upon what's going on. If we meet at noon every single day, you'll find a link on ToniHansen.com for League of Traders, and that can get you a trial to join that education and trading room. And then we also meet every Friday for Forward Focus, which is essentially a session like this, except traders can call in and ask about any security under the sun that they want to take a look at. And we look at it from a technical basis.
So we have something like that we do call Analyze Your Trade. So it's kind of like that as well, right?
Yep, exactly.
Yeah. And as far as when you have these meetings, are your ideas the only ones, or are people sharing different ideas, almost like a chat room type thing?
It's just me. It's on Zoom, and I pull up the charts. And for example, this week we're looking at Fibonacci fans. How do you apply them? When are they going to be useful? When are they going to be things that you need to totally ignore? What situations do we apply them to? And then how do we read them and make adjustments? So I'm using the live markets to basically demonstrate the techniques that we're talking about that week.
Yeah, that's a beautiful thing about what we all kind of do is that we look for things that are numerical oriented, which are based on price. Yeah. And then we try to do a mathematical analysis on probabilities, which, may or may not be better, but it's certainly more comfortable for us than just listening to people's opinions on TV or radio.
Exactly. I focus a lot upon, hey, is this particular indicator giving us a high probability of something happening, or is it lower where we could still see it happening, but it's not as likely to happen? And that's the big difference. Is there's never a it's going to do this or it's going to do that. It's what's the probability of this happening versus this.
Yeah, because sometimes when you're hearing people, they call it talking their book. So if they sell bonds for a living, they're obviously going to have a different slant. Or if they sell stocks for a living, they're going to have a different slant. They're not going to come out and say, "Hey, all those stocks I sold you are terrible, and you're not going to make money for 5 years." You know what I mean? That's just not going to come out of their mouth. So you got to get information, I think, more towards the actual mathematics of where prices are going. Makes more sense. All right. Well, it's great to see you guys, be with you guys here, Sunny, Eric, and Tony, and definitely give them a ring to get their details and information. Thanks for everybody for being here today on a Monday. And I'm going to send it back to David for Option Professor. If you'd like to get our PDF reports on things like how to hedge downside risk and upside surprises, which is a very popular PDF report, just go over to optionprofessor.com, put your details in, and we'll shoot one out to you. Okay, so that's it for optionprofessor.com, and I'm going to give it back to David.
All right, thanks. Yeah, so like I mentioned at the start of the episode, we are going to have 3 days of Tech Wizard presentations. So software indicators, algorithms, apps, tools, and platforms will be covered in this event. And that will start tomorrow at 10 a.m. Eastern time. And you can access the event just by going to TimingResearch.com. Also, like I said, all 4 of the guests today are doing presentations on this event. So on Wednesday, Sunny will be on at 8 p.m. Eastern time. And then on Thursday, Toni will be at 12 p.m. Eastern time, and Eric will be at 2 p.m. Eastern time. And the Option Professor will be at 8 p.m. Eastern time on Thursday. But like I said, it'll be Tuesday, Wednesday, and Thursday each day, starting 10 a.m. Eastern time and going until 9 p.m. Eastern time. So please be sure to join us for that. We got a lot of good presentations lined up. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast app to get instant updates when I post the recordings. Also, you can just go to TimingResearch.com to get access to the recording of this show as soon as I can get it posted, as well as any of the past shows and events. So for example, like tomorrow, for the event this week, I record each of the presentations individually and post those to Timing Research as well. So you can review, if you can't join us live for some of them, you can review each of them individually. And those will be available on posts on TimingResearch.com. So just want to thank my guests again for today. Sunny Harris of MoneyMentor.com, Toni Hansen of ToniHansen.com, Erik Gebhard of AltaVest.com, and the Option Professor of OptionProfessor.com. Thanks, everyone.
Thank you.
Thank you. Right. Bye-bye.
Thank you.